Question 13. How do you manage your business? Answer. To effectively delegate responsibility and authority in your organization, you must accept the power of delegation, know the capabilities of subordinates, ensure that specific training is available, select specific responsibilities to be delegated, clearly define the extent and limits of delegation. Question 14. What is the business skills? Answer. The greatest people in business have certain attributes in common. Several personal qualities are important, like a thirst for continuous education, personal drive and motivation, strong goals and ambition, clear vision, and always a great deal of passion. Question 15. What is the difference between the direct method and the indirect method for the statement of cash flows? Answer. The main difference between the direct method and the indirect method involves the cash flows from operating activities, the first section of the statement of cash flows. There is no difference in the cash flows reported in the investing and financing activities sections. Under the direct method, the cash flows from operating activities will include the amounts for lines such as cash from customers and cash paid to suppliers. In contrast, the indirect method will show net income followed by the adjustments needed to convert the total net income to the cash amount from operating activities. The direct method must also provide a reconciliation of net income to the cash provided by operating activities. This is done automatically under the indirect method. Nearly all corporations prepare the statement of cash flows using the indirect method. Question 16. Is the direct method still used in the statement of cash flows? Answer. The direct method of preparing the statement of cash flows is recommended by the Financial Accounting Standards Board, FASB. However, the direct method is rarely used. Recent editions of Accounting Trends and Techniques published by the American Institute of Certified Public Accountants surveyed 500 annual reports and found that less than 10 used the direct method, while more than 490 used the indirect method. Question 17. What is a cash cow? Answer. A cash cow is often a profitable product or service that dominates a market and generates far more cash than is needed to maintain its market position. Companies may use their money from the cash cow to develop new products or to acquire other businesses. The term cash cow is also used to describe a division or segment of a company that consistently generates substantial amounts of excess cash. Question 18. Where is interest on a note payable reported on the cash flow statement? Answer. The interest paid on a note payable is included in the first section of the cash flow statement entitled Cash Flows from Operating Activities. If a company reports its cash flows from operating activities by using the indirect method, the interest expense for the period is included in the company's net income or net earnings. The interest expense will be adjusted to a cash amount through the changes to the working capital amounts, which are also reported as part of the operating activities. In addition, the actual amount of interest paid must be disclosed. If the cash flow statement or statement of cash flows is prepared using the direct method, the amount of interest paid should appear as a separate line within the cash flows from operating activities. The cash payments and cash receipts of principal on a note payable are reported in the financing activities section of the cash flow statement. Question 19. Why is the cash flow statement identified as one of the financial statements? Answer. The cash flow statement or statement of cash flows is required as part of a full set of financial statements because of the Financial Accounting Standards Board Statement of Financial Accounting Standards No. 95, Statement of Cash Flows. Question 20. If a company issues stocks or bonds to pay outstanding debt, should this non-cash transaction be included in the cash flow statement? Answer. If a company issues stocks or bonds for cash and then pays off the debt, the transaction is reported in the financing section of the statement of cash flows. If the transaction is a direct conversion of debt to equity, shares of stock, or debt to bonds and no cash receipts or cash payments occur, the transaction is to be disclosed as supplementary information. Question 21. Where can I find a sample of a cash flow statement? Answer. A cash flow statement or statement of cash flows should be presented with the U.S. corporation's annual financial statements. If a corporation's stock is publicly traded, the statement of cash flows will be included in its annual report to the Securities and Exchange Commission. Question 22. What is petty cash? Answer. Petty cash is a small amount of cash on hand that is used for paying small amounts owed, rather than writing a check. Petty cash is also referred to as a petty cash fund. The person responsible for the petty cash is known as the petty cash custodian. Some examples for using petty cash include the following: paying the postal carrier the 17 cents due on a letter being delivered, reimbursing an employee $9 for supplies purchased, or paying $14 for bakery goods delivered for a company's early morning meeting. The amount in a petty cash fund will vary by organization. For some, $50 is adequate. For others, the amount in the petty cash fund will need to be $200. When the cash in the petty cash fund is low, the petty cash custodian requests a check to be cashed in order to replenish the cash that has been paid out. Question 23. What is a petty cash voucher? Answer. A petty cash voucher is usually a small form that is used to document a disbursement payment from a petty cash fund. Petty cash vouchers are also referred to as petty cash receipts and can be purchased from office supply stores. The petty cash voucher should provide space for the date, amount disbursed, name of person receiving the money, reason for the disbursement, general ledger account to be charged, and the initials of the person disbursing the money from the petty cash fund. Some petty cash vouchers are renumbered and sometimes a number is assigned for reference and control. Receipts or other documentation justifying the disbursement should be attached to the petty cash voucher. When the petty cash fund is replenished, the completed petty cash vouchers provide the documentation for the replenishment check. Question 24. What are net incremental cash flows? Answer. Net incremental cash flows are the combination of the cash inflows and the cash outflows occurring in the same time period, and between two alternatives. For example, a company could use the net incremental cash flows to decide whether to invest in new, more efficient equipment or to retain its existing equipment. Net incremental cash flows are necessary for calculating an investment's net present value, internal rate of return, payback period,